This is Daybreak Asia. We're counting down to Asia's major market opens. Could be a pretty interesting session today as well. There's a lot of factors to consider here. We just had that big miss for Tokyo CPI right on the eve of the Bank of Japan meeting. We've heard some more currency talk from the finance minister in Japan, Averill, about supporting the yen. Blowout results for some of those US tech stocks, but some concerning data out of the US as well. How's the market going to balance all of this?
Yeah, there is a lot to digest. I mean, just thinking about how that stagflation chatter is coming back to the fore in the US, and then how this yen depreciation, how is that going to figure into the conversation for BOJ policymakers? We are, of course, waiting with bated breath whether this, in a way, forces the Japanese central bank to come through with hawkish signals. But we do have the open in Japan now, and that big tech tailwind is coming through for stocks. A little bit of upside on the Nikkei and the topics at the start of trade. We're still seeing dollar yen hovering at 155.6, and of course it is about whether we get any indication about the curtailing of these bond purchases from the Japanese central bank. It seems like the bond markets are betting that we do. Some pressure coming on the Japanese 10-year government bonds, but let's take a look as well as what we're seeing in South Korea. Yesterday we saw those declines on stocks as the Meta earnings and the outlook really put a dent in what was otherwise a recovery for some of these Asian stock markets. Taking stock, we've seen 4 out of the 7 Mag 7s report, and so far it looks quite good, especially after Microsoft and Alphabet knock things out of the park. They're proving their worth, proving that they're able to make money from all these AI investments. So we're seeing that upside in South Korea as well, the won moving towards 1370. Now let's take a look at what's going on down under, because Australia was of course on break yesterday, and the big news that dropped was how BHP is making a takeover approach for its rival Anglo-American. This is something that could shake up the industry at a time when these miners are really looking to expand copper production. We're hearing that Anglo-American doesn't think that this proposal is attractive, though, and that's because it doesn't quite address how BHP will look to demerge some of its South African operations. We're seeing BHP sliding about 3.3% at the open, as are the Australian, the broad-based gauge ASX 200. Iron ore prices hovering near their 7-week high. It's been recovering, even though we're seeing declines in the Singapore contract today. And this is thanks in large part the recovery due to that improvement in sentiment towards the Chinese economy. Brent hovering near 89.30. Let's take a look at what we're seeing in U.S. Treasuries, because as I said, it's that stagflation chatter as we got the quarterly PCE numbers that were hotter than expected, but growth was soft, that caused a sell-off in treasuries, and we're seeing more of the same now on the 2-year yield. It's really nudging towards that 5% level. Paul?
All right, thanks, Averill. Let's get a little bit more analysis now on the impending BOJ rate decision with Bloomberg Intelligence Chief Asia FX and Rates Strategist Stephen Chew. So, Stephen, we just got the latest Tokyo CPI data. How do you see that potentially muddying the waters for the central bank today?
I don't think it's going to change their mind, actually, because the number obviously understood today, but then that was sort of a one-off, and it's also pertained to Tokyo. It doesn't mean that the nationwide inflation will drop as fast. The drop today for Tokyo is due to education subsidy, and that's not nationwide, as I said. So, of course, the BOJ, after dumping the negative interest rate, after dumping yield curve control last month, I think today they're just going to keep on staying hawkish, even though they may not hike today, but they will still imply to market that they're on course to hike further in the second half of the year, as long as the inflation trajectory stay above 2%.
So we might see some adjustment as well today to bond purchasing programs. What's the outlook for JGBs?
Yeah, that was certainly in the chatter. So last meeting, interestingly, if you look at the footnote of the statement, they said that they're keeping JGB purchase at a pace of 6 trillion yen a month. And indeed, when we look at the data, so over the last 3 months, actually, even like for this month, they were buying slightly below 6 trillion yen. So that's in line with what they've said. So today, we think that they're going to start implying, if not stating explicitly, that they will start to slow that QE, just because I think now all the conditions are met. And the thing is that the BOJ always want to move away from owning too much of the JGBs, because right now they're owning over half of the market. And for any major market, any bond market, that's probably unhealthy in their eyes. So now it's a good juncture for them to hint to market that they're going to start to slow QE purchase, so tapering QE. If they don't say it explicitly, they will probably do a stealth tapering, so you'll see less JGB purchase in action going forward.
Now, of course, it's not part of the BOJ's mandate to worry about currency stability, but currency stability is becoming a problem for the broader economy nonetheless. Is there an element of pressure here to, if not do something in terms of tightening, at least say something that's a bit tougher?
Yes, so it's probably more down to MOF instead of BOJ to talk about the yen. So anything about the yen, we think they'll just talk about the impact of a weaker yen will cause import costs to go up and hence inflation higher. So they may imply a rate hike, but it doesn't mean that they will admit to FX intervention. They will probably tell market that they are watching the market. If anything happens unorderly, if there are more hurting selling of the yen, then they will probably do something. But they will not tell you today explicitly what they're going to do.
All right, Bloomberg Intelligence Chief Asia FX and Rates Strategist Stephen Chu there. Let's get over to Ed Gomes now for more on this. He's CIO at SGMC Capital. And Ed, as Stephen was outlining there, we've heard plenty of words in defence of the yen. No real action, so to speak, as yet. Do you anticipate anything, at least in terms of some tougher rhetoric to defend the yen from the Bank of Japan today?
Morning, Paul, and great to be on the show. I don't think rhetoric is going to cut it anymore to the extent that they had to talk. They were talking at about 152. That was about 2 or 3 weeks ago. A lot of comment, a lot of chatter out of the BOJ and the Ministry of Finance. That's not going to work anymore. Keep in mind that the forward expectations 1 year forward for rates, is about 30 basis points higher for Japanese yields, and the U.S. has seen a collapse in, from 7 cuts down to maybe 1. So you still have about a 5% interest rate differential in favor of long U.S. dollar positions. And that is just money on the table, to be had. Also, any intervention that the Bank of Japan might do in the currency markets is going to impact the bond markets as well as the equity markets. So, do they really want that pain the painful decision of intervening in the FX markets having impacts on other markets? Probably not. So overall, we don't really expect them to be able to say anything to talk the currency down. They've got to do something. And with that comes pain. So breaking the 152 on dollar yen, Aussie yen is over 100. Seems like, there could be further downside to the Japanese yen for that.
Look, as a CIO, if you saw intervention and the yen got a bit stronger, how would you view that? Would you just view it as a more attractive selling position?
Absolutely, because like I said, the fundamentals, don't really support the position of the Bank of Japan. What they need to do is, can they take rates to 5? Probably not. Can they take it to 2.5? Probably not. Can they expect and be happy with an equity market that just crashes? What happens when they, start selling the 7%, of ownership that they have in Japanese equities and ETFs? They can't deal with all of that. They're, domestic growth is really not strong. They have to live, on the exports that come in. And they're doing reasonably well there. Meaning a lot of Japanese companies have, some great technology, so there are willing buyers. But, what's happening with the domestic economy, your population growth, your demographics are so weak that, there really is no hope, of a strong domestic economy. And you don't have immigration like, you have in, say, the U.S. So you're not going to get the benefit of that either. So they're in a bit of a catch-22. They're going to manage it the best they can. But, just down to intervention, I think it's going to be a temporary temporary help for the currency to appreciate, not a longer term fix.
We got a few more interesting ingredients for this soup a little bit earlier today as well. We had US GDP showing a pretty sharp slowdown in the first quarter. We're still in positive territory, but it was a lot weaker than we were expecting. And the PCI numbers showed that there might be a whiff of stagflation in the air in the US as well. Has this changed your prospects at all for potential Fed easing or potentially making life more difficult for the BOJ?
Overall, we've been expecting out of the U.S. about 2 or 3 cuts for 2024. So we were nowhere close to the 7 cuts that the market has been expecting. And now the market has moved to just north of 1 cut for this year. So we still expect 2 or 3 cuts to come through. The parts of the inflation out of the U.S. which are coming through from insurance prices as well as rentals, that clearly is an issue and is not budging at all, even on the back of high interest rates. So there's likely going to have to be some kind of policy fixes, some kind of policy debate in terms of specifically how to address these points. I think oil higher is temporary. The price of oil is volatile, and the U.S. is relatively it's net exporting oil even at this point of time. Biden is talking about increased nuclear energy production. So that's going to be something which offsets the higher price of oil. So energy is not as big a deal as is rentals as well as insurance premiums. And the Fed is not going to have the tools to address very, very specific niche parts of the market. Overall, the U.S. economy is doing really well. You've seen the CHIPS Act lead to a lot of investments, not by the U.S. government alone, but also by multinationals. You've got TSMC, you've got the Japanese firms, you've got American firms setting up production facilities. All of that's leading to a massive construction boom, as well as production boom, and then the ancillary industries to help the main industries grow. So you're probably going to have a U.S. economy, despite the weak GDP numbers reported. We're not too concerned about U.S. economic growth. And yes, that does become a problem for the Bank of Japan when you consider what's happening to dollar yen.
Mm-hmm. Ed, as we've been talking, we've seen some interesting moves for bond yields. We've got the 10-year yield for Japan now rising to the highest since we've seen since November. And the US 2-year, well, it finally did it. It's broken through 5%. Where do you see yields heading from here?
Well, for the U.S., it did break 5% overnight in the U.S. session as well, and then came back down. Like I've been saying, the growth numbers out of the U.S., don't necessarily dictate a Fed, which has to be at this point of time very, very dovish, and we're seeing the expectations being built up there. Out of Japan, it's just wait and watch. You've got a BOJ meeting, and we're just going to have to see how they play this. To the extent that they pull back bond purchases, clearly that's going to just add more fuel to the fire. But for the U.S., I wouldn't be surprised. The risk to our expectation of 2 cuts probably being felt more towards the end of slightly maybe just 1 rate cut or no rate cuts at all. The Bank of Japan is moving too timidly even as of right now. So 30 basis points at the end of the year, even if it's 50 or 60 basis points, is really not going to be a game changer for them.
All right, Ed Gomes, CIO at SGMC Capital. Thanks so much for joining us with your insights today. Let's take a look at what's moving in some of these big tech names in the Asia Pacific at the moment. We've got SoftBank rising right now. A little bit of softness for Rakuten. Of course, we saw some great results a little bit earlier on from Microsoft and Alphabet. Alphabet announcing a share buyback and a first ever dividend as well. Take a look at some of the Asian chip makers also. It was a pretty forgettable quarter for Intel. We do have SK Hynix, though, recovering a lot of the ground that it lost on Thursday after its results. Suggests maybe there was a bit of profit taking at play SK Hynix rebounding pretty sharply. It's now off 1.3% from yesterday's open, but up about 4% today. Samsung Electronics gaining in the early going as well. Now, I want to talk a little bit about BHP also. It's slipping a bit at the moment, and I believe BHP is it's down the most, in fact, in 7 months, trading volume doubling as well. Now, this is after a story that we brought you yesterday during a public holiday here in Australia that BHP is reportedly making a bid for Anglo American. That bid's worth $59.6 billion. It's an all-stock bid. So this suggests that the days of big deal-making might be back on the table for the BHP chief executive. Mike Henry is particularly interested in copper interest, and we've seen copper prices showing some pretty strong gains over the past few weeks as well. All right, BHP there off about 4.3% at the moment after 15 minutes of trade in Australia. Right, you see the yen there? Watching that very closely. We have more talk from the Ministry of Finance today, but still no action. And of course, we're wrapping up the BOJ's two-day meeting. We're going to have more on the outlook for the yen ahead of that decision, and we're going to hear why Standard Chartered Bank is expecting some modest upside for the currency. Up first, though, US Secretary of State Antony Blinken. He's wrapping up his China visit as Beijing rebuffs his criticism of their trade policies. We'll have details of that story next. This is Bloomberg. Beijing has pushed back against US trade criticisms as Secretary of State Antony Blinken continues his visit. The Foreign Ministry says China's practices are in line with international rules. Blinken's been telling officials that US firms need a level playing field in China, while also calling for sustained communication.
We have an obligation for our people and indeed an obligation for the world to manage the relationship between our two countries responsibly. That is the obligation that we have, and one that we take very seriously. And I think the direction from President Biden and President Xi was to continue to build those lines of communication, to sustain them, and again, to deal directly with our differences as we also seek to build cooperation.
All right, for more on this, let's get to Greater China Senior Executive Editor John Liu, who joins us now. John, one gets the sense that the US and China are talking past each other to a degree at the moment. Is the best that can be said is that at least they're talking?
I think there's a lot to be said for that, Paul. The fact that the two countries are talking. You'll remember there was a long period after the spy balloon incident where there was no talking. And so we are in a better place after that meeting between Presidents Biden and Xi in San Francisco. Secretary Blinken's visit is in large part to try and build some momentum on that meeting. Obviously, there are lots of hurdles. The issues with between businesses and market access for American companies, that's a big one. I'm sure, we have not heard it publicly, but I'm sure the Chinese side is raising questions about what the U.S. government is doing when it comes to TikTok. That bill that was signed yesterday by President Blinken also included additional money for Taiwan for military aid, and so that is going to cause some ire in Beijing as well. So lots of issues on the table, but I think talking is the good thing here.
Yeah, John, that TikTok ban or divest bill got passed just as Antony Blinken basically set foot on the ground in China. Did he get any blowback on that?
Oh, if there has been any blowback, it has not been in the public venues that we've had access to. The Chinese side has been relatively restrained when it comes to giving their response to that situation. The Foreign Ministry, all they have done so far is refer back to something the Ministry of Commerce said earlier, which was that China would do all it could to defend the rights of its companies. We do understand there was an earlier bill passed here in China that any sale of assets involving high-end advanced technologies would need Beijing's approval before it could be sold. And so we do believe that means TikTok would have to get Beijing's approval before they could divest of their U.S. business, which kind of means it would make it extremely hard for them. So the situation is really complex now. We are waiting for more from Beijing, but so far they have been quite restrained.
Also, another issue Antony Blinken was raising was concerns about China's role, real or imagined, about what's going on in terms of Russia and Ukraine. How did discussions on that proceed?
We do know that it was going to be at the top of the list when it came to subjects that Secretary Blinken wanted to discuss with the Chinese. The Chinese side has continued to provide support, maybe not directly military aid in terms of weapons, but they have rhetorically, economically, in terms of trade, continued to be there as a support for the Russian economy, the Russian diplomatic efforts. The Global Times, a fairly nationalistic newspaper here in China, did say that it seemed like every time the U.S. officials visited Beijing, it was like an ultimatum they were bringing in. So that is sort of the way the Chinese government is seeing some of the rhetoric coming out of Washington about Russia and Ukraine.
All right, Greater China Senior Executive Editor John Liu there. We do have plenty more to come on Daybreak Asia. This is Bloomberg. Barclays shares jumped the most in more than a year after higher equities trading revenue in the first quarter helped pre-tax profit beat estimates. CEO CS Venkatakrishnan told us exclusively that he's expecting more uptick in stocks and deal flow.
Deal flow and the equity markets themselves have been starting to show some buoyancy. As I said, we are on our equity floor here, and then our own numbers in equities have shown an uptick for this quarter versus the same quarter last year. I think deal flow is increasing. You know, in our own energy business or our sustainability business and the transition business, we've seen 9 deals in the last quarter and a bit. And so I do think that there is a deal flow happening. I think, though, it's very early. You've got to give it a quarter or two to cement.
Is Barclays prepared to capitalize on that when it does ultimately come to fruition, when it does actually see a little bit more momentum? Is Barclays positioned to capitalize on that, given a little bit of an exodus in terms of your bankers, as well as lower advisory fees relative to your American peers? How do you tackle that?
Yeah, well, it has been and it is a very, very important area of focus for us. We want to increase what we do in M&A. We want to increase what we do in equities. We have hired a lot of very talented bankers. We are focused on the energy transition. We are focused across the important sectors of technology and healthcare. And so we absolutely are positioned to capitalize on it. And you should see the results over the coming quarters. It's not something that's won in days, weeks, and months, but over a longer period of time. And we've put the sustained investment and skills behind it, and we will continue to do so.
Can I ask you about M&A within the UK market, Venkat? We've got a bit of M&A taking place. Barclays, you yourselves in the process of acquiring Tesco's retail bank offering. We also have consolidation with Nationwide buying Virgin Money. The building society space, we see consolidation there as well. Is this a sector where we'll see more, and are you going to play more of a role in that?
Well, I think at any time you have an inflection in the interest rate cycle, as we have had, with changing capital models and changing consumer regulation, it stresses business models, and it therefore drives some amount of M&A. I think our own acquisition of Tesco Bank is something that's win-win for Tesco and for us. We were looking to grow our unsecured lending. And I think you will see other institutions look at that. We have been very, very clear. Our plan for growth is predicated on as an organic one.
That's Barclays CEO CS Venkatakrishnan speaking exclusively to Bloomberg's Kriti Gupta and Anna Edwards. All right, let's take a look at how we're doing in commodities right now. Crude prices creeping up again. Brent now just hovering below $90 a barrel. When we're seeing a bit of a recovery in iron ore prices as well, pulling back a little bit this morning, but a little bit of optimism around Chinese demand helping to support iron ore prices there. Copper prices also remaining quite elevated, still hovering just below $10,000. It's not really helping Australian materials producers though. A little bit weaker at the moment. Still to come, Standard Chartered Bank shares and their outlook on the yen. This is Bloomberg. All right, let's check in on how the markets are faring on BOJ decision day. Avril Hong's in our Singapore studio. Avril, what are you watching?
Yeah, big day as we wait for the words of Wade, and not just that decision. It's also going to be about what he says, those signals to the market. But we have the markets in the first 30 minutes of trade in Japan and South Korea. It's a bit of a mixed bag as we got a bit of a tailwind from the big tech front after those blowout earnings from Alphabet as well as Microsoft, proving their worth, those lofty valuations being justified in a way as they show that they can make money from their AI bets. And we also have the open coming up in China. Something to note here is how these cheap Chinese tech stocks have been outpacing some of the gains for this month, at least in the Mag 7s. And it gives you a sense of how they're pulling ahead at a time when the U.S. tech stocks are grappling with those concerns about the Fed narrative, higher for longer, and despite what we're seeing from the earnings front. So mixed picture in the Asia Pacific, but down under, we're seeing that drag coming through from BHP Group. Investors not liking what they're hearing from the mining giant about that takeover for Anglo-American proposal. And this is on a day when its peers, Rio Tinto, Fortescue, are moving up. That's the drag on the ASX 200 today. Flip the ball. Let's take a look at some of the chip movers as well. Chip makers, I should say. It is the SK Hynix, Samsung, that chip front really moving up today. And this is along with what we're seeing in the after-hours trade of all the big tech shares. Let's take a look at what we're seeing on the Japanese currency as well. As you say, it was about the BOJ, and we're seeing not much of a move right now on the currency. It is that speculation that we could see the central bank start talking about the start of curtailing its massive bond purchases. We're also hearing about the Tokyo CPI. It was a miss on all fronts, but for now, traders seem to be shrugging off that data as a bit of a one-off.
All right, thanks, Avril. Let's talk about price growth in Tokyo. It did, of course, decelerate sharply in April to a pace below 2%. And it happened as traders eagerly await the Bank of Japan's rate decision. Senior Japan economist Taro Kimura joins us now. Now, Taro, we were awake to the possible risk of an undershoot on this number because we did have an elimination of school tuition fees, high school tuition fees in Tokyo. But does that explain away a miss of this magnitude?
Right. Actually, we have to digest several things in today's reading for Tokyo's April CPI. So obviously, as you said, the waiver of high school fees in the Tokyo district is cutting off 0.5 percentage point from the core from the headline. And given that the core reading, which is the target of the BOJ's policy, is 1.6% year-on-year on its growth, it's like without the school fee effect, it's likely to be 2.1%, which is actually lower than the consensus, still lower than the consensus forecast of 2.2%. And I was hoping for a stronger gains. So that means probably still consumers who are still in the cost of living crunch is hesitating to purchase something that's the price of which has been risen. So overall, the reading was surprisingly weak, barring the effect from the school fee surprise.
Yeah, so do you think this is going to be a one-off, or is it going to be a trend that's reflected nationwide?
This is obviously the school fees are one-off, and also it's limited to Tokyo area, which is less than 10% of the total nation's CPI. So it's not going to be a huge downward pressure to national CPI reading. But we have to be careful that barring that effects, underlying inflation is probably not as strong as the Bank of Japan has expected. So probably the Bank of Japan wants to show some hawkish tone, but the weaker results in the CPI will kind of bind their hands in their sending their signals.
All right, senior Japan economist Taro Kimura there. Let's get a little bit more on the yen now with Stephen England, global head of G10 FX research at Standard Chartered Bank. So we've got a yen a little moved after that big miss that we had on Tokyo's CPI, but it's still really weak, Stephen, 155.64. Are you expecting to hear anything from the BOJ this afternoon that might help put a floor under the currency?
I think they're going to try, but we don't think that they're going to change policy. We don't think that they're going to make a strong commitment to change policy anytime soon. And the impact of verbal intervention seems to be diminishing. I think that the market was reluctant to sell yen, say when the U.S. data came out this morning, for fear that they might pull some sort of rabbit out of a hat. But if they don't, we could see dollar yen sort of punch even higher.
Yeah, to your point on jawboning, we did hear again from the Finance Minister Suzuki earlier this morning saying that they're keeping a close watch on the currency, but they've been saying that for a very long time now. When is the time to act and stop talking? And would it make a difference?
Well, I think the time to act probably would have been when it was capped at 152 before the U.S. CPI came out. I think that at that point, intervention could have put a lot of P&Ls into negative territory, because most of the yen had been bought, say, north of 149 and even north of 150. I think now that there's quite a buffer of profits in terms of selling yen, it would be hard, I think, to really intimidate the market. So I think in order for it to be effective, what they would have to do is say something very concrete in terms of raising monetary policy, almost a commitment to do it. And that might make the market vulnerable to intervention as a bridging type of policy. But if they just try intervention with the way rate differentials are going, they'd probably have to put a lot of money in for not much impact.
Yeah, and that was a remark that Finance Minister Suzuki made as well. That rate differential, it's a factor, and it's to a large degree beyond their control. And, I give you Exhibit A out of the US today, the worst of all worlds on data. We had sharply slowing growth, inflation proving to be sticky. That's pushing out those Fed rate cut bets even more. Where do you see the dollar going? Where do you see the yen heading relative to that in this kind of environment? It just seems that it's going to be more of the same no matter what policymakers say.
Well, look, I think that the slowdown was a bit overstated. GDP is kind of a funny number. We all talk about it, but it's probably not the most reliable indication of where activity is. I'd say that the consistent payroll numbers that we've been getting probably tell us more about where the economy is. The inflation side, I think, is a problem. We think it's going to come out at 2.8. If it does, year-on-year March core PCE, if it's not 2.8, 2.9 is more likely than 2.7. So we could see some more pressure here. Ultimately, we think that there will be some convergence, and we still expect the Fed to cut twice this year. But I think the market's waiting for that convergence to be, more visible on the radar screen rather than kind of hoping and praying.
Yeah, so you see 2 rate cuts. That's increasingly becoming a bit of an outlier position. But I'll tell you one position that's not so much of an outlier. If we look at Europe, the ECB, there seems to be a bit of consensus gathering around June as the month for easing. Is that your view? Do you see it ending there? And what's your outlook for the euro?
Well, we think that they are going to cut in June. We think that they're going to continue to cut through the year, and that we'll probably see differentials with the U.S. widen, and we expect the euro to go down to 104, 103, 104 by the end of the year, and that would be where it troughs out. I think ultimately the U.S. is going to catch up in terms of cutting, but I think the path is going to be slower and more delayed. So through this year, we see more downside risk to euro dollar than upside risk.
Just want to talk about something a little bit closer to home where I am. The Aussie dollar has popped above 65 cents US this week because we had a hotter than expected inflation print here as well. Inflation's coming down, but not at the pace that the RBA might have hoped. So do you see a bit of Aussie dollar strength in the future?
Yeah, look, Aussie dollar and most currencies have traded on the back of central bank reaction functions. So I think that the CPI tells the market that RBA isn't going to cut again, and probably the next move could be that they're not going to cut anytime soon. Next move could be a hike. If you chart it out against CNH, the relationship isn't as tight as it used to be. It's much tighter with rates. So we actually like Aussie dollar on crosses, maybe not so much against USD, but against things like Swiss franc, we think it'll do well.
All right, Stephen England, Global Head of G10 FX Research at Standard Chartered Bank. Thanks so much for joining us with your insights. Still to come, China's largest auto show's underway. The industry's biggest names, including BYD, Geely, and more, showing off their hottest new designs. We're going to be live at the Beijing Auto Show up next. This is Bloomberg. China's largest auto show is back in Beijing. Some of the biggest names in the industry showcasing their extravagant new models. Our Chief North Asia correspondent Stephen Engels spoke with BYD's head designer Wolfgang Egger about the inspiration behind their cars.
Technology and design, they need to be also one firm unit. And for this we are also very, as designers and as BYD generally, also our customers very happy because the latest technology, the platforms, they are thought from the very beginning to offer the opportunity also to realize these proportions, because this depends also on the technology. Because sometimes you want to do it and you cannot because the base is not adapted. But in our case, we are so lucky that we have wonderful platforms.
This is Wolfgang Egger's latest offering from the joint venture that BYD has with Mercedes. Denza is the company, and the car is the Z9 GT. You can really see some of those European influences coming out in the lines of this car, kind of a shooting brake style luxury EV. Really emphasizes technology as well as speed. This car will go 0 to 100 kilometers per hour in just 2 seconds, and it could be quick to the European market, perhaps as early as the fourth quarter of this year.
The company chairman, also my boss, Mr. Lian, they give a complete free space for design because they know about the importance of design. And I never enjoyed so much freedom as I'm doing here now in this period. The new thing is really to search again and bring back the emotion to these cars with the beauty. And we have these lines, very elegant, still not art, but we are really looking to get close to this challenge to have a timeless piece and a beautiful piece that people can love in all over the world.
You can definitely see Egger's Lamborghini experience shaped in this Yangwang U9 super sports car, also from a BYD affiliate, Yangwang. Now, speed obviously is a big theme here, including speed to market. One thing Egger told us is that unlike the legacy automakers in Europe, BYD and the Chinese automakers can take from design phase to market pretty quick in as little as about 2 years.
The speed is higher. It's higher. No, we are running much more and working hard. Also, our team is working day and night very hard. They are all in competition, creative competition, but they are all one team and have a common heart. Now we reached the 24 months target for developing a car, from the creative moment to the production. And so, yes, this is amazing. It's amazing.
And what would a Beijing Auto Show be without a concept car? This is the supercar from, of course, designer Wolfgang Egger, perhaps his vanity project. It is a concept, yes, but could come to market. It is the Fengchengbao Super 9. And I can kind of see where the inspiration came from. If the Batmobile or the Mach 5 from Speed Racer were an EV, this would be it. Limited windshields, no roof, fast as lightning. Stephen Engel, Bloomberg News at the Beijing Auto Show.
And Stephen Engel joins us live now from the Beijing Auto Show. Stephen, that car looked very practical. What are you looking at today?
I always wanted a Mach 5 from Speed Racer as a kid. I'm kind of showing my age, but that car was special. It is a concept, obviously, from Wolfgang Egger. You know, the perspective on Wolfgang Egger is that he was the former head designer at Alfa Romeo, Audi, and Lamborghini. So you can see those European lines in his designs. And there's no doubt why BYD, now the biggest EV maker here in China by far, 33% of the market, hired someone like him to kind of up the game on the design front. They have the scale, they have the technology with battery and also on the platform as he described there. But design was always sort of, if I can speak frankly, was always sort of lacking. So he has come in to refurbish the lineup. And believe me, 6 of the top 10 cars sold in China, EV cars, in the first quarter were BYD cars. A lot of that was due to price because they were able, with their scale, to bring the cost down of the car, some below $10,000 But again, upping the game on the higher end with those more European lines and, as he talked about, timeless classics. And that's what BYD is trying to do so they can compete against those legacy players globally, not just here in China. And again, it is a major theme, China's domination of the EV space as the legacy automakers like Toyota from Japan, like Mercedes, like Volkswagen, all come here to see what they can do with their EVs in an already pretty crowded market domestically here in China.
Steve, one of the things that gets talked about in the same breath with EVs is full autonomous driving. Of course, we had Elon Musk doubling down on that commitment earlier this week, and you're going to be talking to James Peng of Pony AI. What are their plans around autonomy?
They have a lot of plans, and of course they just got approval from Chinese government to list in the United States. You know, we haven't had sizable IPOs from Chinese tech companies in years. I mean, we haven't had one since over $100 million Chinese listing since 2022, and that also was another company that does sensors for autonomous driving. So again, we're going to be talking to James Peng, the co-founder, the CEO, and that's another reason why we're in front of the Toyota booth this morning, because they have a big partnership and they basically have a big backing from Toyota, as the future is, many car makers say, autonomous driving, or at least more assisted driving, and they do the technology and the AI for that. So it'll be a very interesting conversation, no doubt.
All right, Chief North Asia correspondent Stephen Engel there in Beijing. And on the topic of Toyota, the company is moving ahead with plans to make and sell more EVs in the US. It's investing $1.4 billion in a plant in Indiana. The Japanese car maker says the factory will add an all-electric 3-row SUV to its lineup. And in February, Toyota revealed plans to spend $1.3 billion on a factory in Kentucky to make fully electric SUVs. Now be sure to tune into Bloomberg Radio to hear more from the day's big newsmakers. You can get in-depth analysis there as well from the Daybreak team, broadcasting live right there in our studio in Hong Kong. You can listen via the app, Radio Plus, or BloombergRadio.com. Plenty more to come. Stay with us. This is Bloomberg. Let's take a look at the latest corporate stories. The Information is reporting that Elon Musk's AI startup, XAI, is close to raising $6 billion from investors as the company looks to compete with OpenAI. Their sources say the funds would value the company at $18 billion, excluding the investment. Sequoia Capital is said to be one of the investors participating in the funding round. Chipmaker Micron is set to receive as much as $13.6 billion in grants and loans from Washington to help build new American factories. The firm has pledged to invest about $125 billion to build plants in 2 U.S. states. President Biden has hailed Micron CEO Sanjay Mehrotra for the chip company's investments. Atlassian's shares fell in extended trading after news that co-founder Scott Farquhar is stepping down as co-CEO after 23 years. Mike Cannon-Brookes will become the sole CEO. The software company says Farquhar will spend more time with his family, but he's going to remain on the board. Atlassian reported third quarter results that largely topped expectations, but his forecast for adjusted operating margin did fall short. A report says ByteDance would prefer to shut TikTok rather than sell it to a potential US buyer. Reuters cites 4 unidentified people close to the Chinese company, saying the algorithms TikTok uses are considered core to its operations. ByteDance denied an earlier report from The Information, saying it was exploring a TikTok sale without its algorithms. All right, let's take a look at how we're doing for futures. It was, of course, a very good day for some of those big US tech names. Microsoft and Google are both performing pretty strongly, and we got S&P E-mini futures right now better to the tune of 0.75%. We saw NASDAQ triple Q ETF that tracks some of those big tech names in positive territory as well. Take a look at the yuan there, 725.75 against the greenback at the moment. And we've got other futures, though, looking to be in somewhat mixed territory. Well, let's take a look at how some of these Japanese assets are trading at the moment as well. Of course, also off the back of those impressive tech earnings from the US. The broader Nikkei looking kind of flat at the moment. The yen, of course, very much in focus. Not a lot of change there, 155.61. But just to give you some context on what we saw today, we got a real shocker, Tokyo CPI for the month of April. That came in at 1.8%, I beg your pardon, for the month, and that was a big undershoot on the 2.5% that we were expecting. That could potentially have implications for what we see with inflation nationwide in Japan, and of course the BOJ is holding its meeting today, or it's wrapping up its 2-day meeting today. So the press conference from Governor Ueda going to be really closely watched. We're not expecting any policy change, but we might see a rhetoric change and possibly a change to the bond buying program as well. That is it from Daybreak Asia. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.